Hi students, welcome again to joint venture video lectures. What exactly the joint venture is, definition, features, advantages, disadvantages, parties, and we learned in and how many methods of joint venture accounts regarding one co-venturer, all co-venturers, separate set of books, maintained separate set of books are not maintained. So earlier problem, only example problem I explained with that is model 1 or method 1, entering into one co-venturer's books. But I explained in both the books, two parties books. So one co-venturer and other co-venturer also, same. And this problem is also he is asking only for one co-venturer, and I will explain both the co-venturers like our consignment, consigner and consignee. First, we will understand the problem. A and B entered into a joint speculation and purchased an old house with extensive grounds for 8,000. So A and B are agreed to start a business of taking a old house, and they would like to buy a old house for 8,000 rupees. For this purpose, each will contribute 4,000. So A is contributing 4,000, B is contributing 4,000. For an agreed fee of rupees 500, A is to manage the disposal of the property. So A is managing the business, or A is managing that demolition work for fee of for his commission 500 rupees. And sales of internal fittings, windows, etc. amounted to rupees 1,700. So old house, when we are demolishing, the automatically old material we can sell outside. For that amount realized is 1,700. A pays rupees 300 for demolishing the house material, for which realized 200. Again, he got 200 rupees. Earlier, old windows, etc., 1,700, and here the material he disposed for 200. Total 1,900 received. Sundry expenses paid by A were rupees 100. Earlier, A paid 300 plus 100. Total amount paid by A on his account is 400 rupees. The whole of the land eventually sold for 900. So the old house is demolished and the land was sold for 9,000 rupees. That is sales. A and B share profits equally. A paying B his share by check. A paying B his share by check. Okay. So we have to pass the journal entries in the books of A as well as B also. Record these transactions in A's journal and show the joint venture account, B account in the ledger itself. Okay. Right. We will concentrate recording the journal entries in the books of A only. Okay. Simultaneously, we update in the B also. Okay, right. So first, what is the cost of the house? 8,000. Each will contribute how much amount? 4,000. Now A is managing the business. B will pay the money to A. How much amount? 4,000. So A is receiving cash account data to joint venture. Sorry, cash account data to B account. It is received from B. Amount is 4,000. So contribution received from co-venture. Contribution received from co-venture. Right. With the 4,000 amount and his 4,000, he purchased joint venture account data to cash account 8,000. Old house purchased for JV. Old house purchased for JV. Okay, right? And his fee is 500. We will write later. Is to disposal and sale of material and 1700 and old house material 200. Total amount received is 1900 plus the sale amount is 9000. Total sales amount is 10,900. He is doing the business, that's why in his name you have to write cash account data 10,009. Right? So there were joint venture expenses account data to commission account is 500. Joint venture account data to and one more entry, joint venture to cash. A expenses. He paid how much amount? We'll check once again. 300 for demolishing the house, material and sundry expenses paid by A are 100. Total 400 paid by A. Joint venture to cash. JV expenses paid by A. Paid by A. JV expenses paid. In the books of A, we can't write A itself. Okay? Right. So next sales also we recorded. 9,000 is the sale of old house. Where exactly it is? Sales. Cash account data to joint venture account. $10,900. 10,900. So it will be sale amount is 9,000 plus 1,700 material plus 200 also old material. Sales. Okay. So profit we will update later. Balance also will update later. So in this, first we will complete joint venture account. Cash account data to B account. In B account, buy cash 4,000. Joint venture to cash 8,000. Joint venture to commission. Amount is 500. Joint venture to cash, 400. Cash account related to joint venture by cash, 10,900. 2 times also we can write journal. 3 times also we can write journal. First time 1700, second time 9,000, second time 200, and third time 9,000 also we can write. Next, cash account related to joint venture. Joint venture account related to profit and loss account. Look at the joint venture account. Difference amount is 2,000 is divided between two people, 1,000. 2,000. Right. So this 1,000 we will update in this B account. The profit entry, joint venture account related to profit and loss account to B account. B account by joint venture 1,000. Then the payment is 5,000. So we have to pay to B account data to B account data to bank account. Amount is 5,000. That's it. Okay. So that's it regarding the method which we are discussing, that is in the books of one Coventurer. Now we update the journal entries in other Coventurer also. Right. How much amount paid? 4,000 to cash account. A account data to cash account. Amount is 4,000. Investment share paid. Right. Next to old house is purchased by A. In our books, we will write in the name of A. Joint venture account data to A account, 8,000. And commission is due. Joint venture account data to A account. Commission is due to A. So on his name, we will write commission amount. Right? AV commission. Joint venture commission. One more 400 expenses are there. Joint venture account data to joint venture account data to cash account to A account. Amount is 400. Next to sales money received. So this money also received by A. In B books, we are writing A account data to joint venture account. Amount is 10,000. So narration, goods sold by A house. Now profit and loss account. Profit amount is 2,000. Distributed profit and loss account, that is B share 1,000 to A account. 1,000. So amount paid, amount received from cash account return, A account 5,000. Coventurer account set it. Right. One by one, look at the journal entries. First journal entry, joint venture account data, A account data to bank account or cash account. We are preparing A account in the books of B. Cash account is 4,000. A purchased joint venture account data to A account by joint venture 8,000. Joint venture by joint venture 500 coming. By joint venture 400. A account data to joint venture 10,000 and 1,000. Commission by joint venture 1,000 commission. 1,000 and 1,000. The payment received is by cash 5,000. It's 18,900. 14,900. 14,900. Tallied. Which is a tally. Students usually ask us to prepare only according to the first method, journal entries in the books of one party only, but we are preparing in both the parties. We'll move to next problem. Simple. Okay, remember the journal entries. Passing the journal entries will be very easy. Arjun bought goods of the value 12,000, sent them to Prabhakar to be sold by him on joint venture. So one is Arjun. Arjun, another one is Prabhakar. Prabhakar. Arjun bought goods to the value of 12,000. Joint venture account data. And that was sent to Prabhakar. Joint venture account data to Prabhakar account. Amount is 12,000. These are goods which are on behalf of Arjun. We will record is 12,000. They agreed to share profits in the ratio of 2 by 3, 1 by 3. Arjun paid rupees 800 for freight and insurance and drew a bill on Prabhakar for 8,000 on account. Right. Arjun paid how much amount? 800. Expenses. Joint venture account data to cash account. Arjun account 800. And he draw the bill. Bills receivable account data to Prabhakar account. Bills receivable account data to Prabhakar account. Bill amount is maybe 8,000. Check. PYR. And here Arjun account data to bills payable account. Arjun account data to bills payable account. 8,000. Okay, we'll see later and change. 8,000 correct amount. The bill was discounted by Arjun 7,600. Prabhakar paid 500 towards dock charges, 600 towards rent. So we'll pass journal entry for discount the bill. Discounting the bill. And for bank account data. Discount account data. Same like bills of exchange and bank account data, discount account data to bills receivable account. Bills receivable amount we know that it is 8,000. Bank amount they received 7,600. 400 is discount. That's all. BYR discounted. So usually no journal entry in the top other co-venture. Next, what happens? Prabhakar paid 1,100 towards joint venture expenses. Joint venture account data to Prabhakar account. joint venture account data to Prabhakar account for the expenses. Stuff cash we have to record on his name, Prabhakar. Amount is 1100. And the sale proceeds amounted to rupees 20,000. Prabhakar sent a draft for the balance amount due to Arjun after charging 5% commission on sales. So first sales made by Prabhakar. Past journal entry or joint venture account. Cash account data to joint venture account. Here we can't write cash because Prabhakar account data to joint venture. Amount is 20,000. Goods sold. AV goods by Prabhakar. Now one more entry for commission. Joint venture account data to Prabhakar account. You please by heart the journal entries. Journal entries are in your mind, then what I am passing you can easily understand. If you are not well versed about journal entries, you will be get confused. 5% of 20,000 is 1,000 commission. You will get confused. How I am writing, why I am writing that journal entry. That is also a confusion for you. So instead of that, what you will do, you don't open the video. Open the video and find out what is how the procedure is going. Joint venture commission. Right. So look at the journal entry wise. First joint venture account. First we will prepare joint venture account. Joint venture account data to Prabhakar account. Amount is 12,000. Joint venture account data to cash 800. Bills receivable account data to Prabhakar account. Not Bilal. Bilal is the old one. So under Prabhakar account, this is Prabhakar account. Payables receivable. Amount is 8,000. Bank account data, discount account data, we may not get this one. Joint venture account data to Prabhakar 1100. By joint venture 1100. Joint venture account data. Amount is 1100. Next entry, Prabhakar to joint venture. Prabhakar account data to joint venture 20,000. And in by Prabhakar 20,000. Next entry, joint venture account data to Prabhakar account 1,000. Okay. So 20,000. Here also 20,000. Right. In this 4,900, 5,001. 2,550. Profit only 500. Arun bought food. After amount is how much? 500. 20,000, 12,000 is 8,000 paid by 12,000. Prabhakar to be sold goods on joint venture. They agreed to share 2/3, 1/3. Arjun paid 800 per freight and insurance. 800 per freight and insurance. And drew a bill on Prabhakar for 8,000 on account. The bill was discounted by the Arjun son. Prabhakar paid rupees 500 towards the upcharges, 600 towards rent, 1100. Right. The sale proceedings amounted to 20,000. 20,000. The sales. Prabhakar sent a draft balance amount due to him after to Arjun, due to Arjun after charging 5% commission on sales, 1,000. Okay. And 500 it will be 12,000. Five hundred plus 600, 800, 1,900 only. Commission amount to 5% on sales, 1,000 rupees. Goods purchased is 12,000. Okay, right. Then the amount is 5,100. 2/3. 1/3 is 1,700. 3,400 is okay. Students, now that profit is distributed among the co-venturers. Joint venture amount 5,000. A amount 3,400. B amount 1,700. Okay. I prepare Prabhakar account. First journal entry by joint venture 12,000. Cash by bills receivable 8,000. By Prabhakar 11 by joint venture. Prabhakar to joint venture 20,000. Joint venture account data to Prabhakar by joint. Amount is by joint venture 1,700. His share is 17. Okay, right. But we have to write. Last entry we have to write. Total amount 20,000, 21, 22, 100, 23, 8. Eight. To bank 3,008. And 8. Okay, students, you prepare this journal entries in the books of Prabhakar later on. Okay, video time is more. Okay, Ranu. Will you do that? And venture to cash. You try your level best. Okay, students, by next video, we will do with the maybe same, I think, because first method, second method, we are treating it as a same. First method, he is asking us to in the only one co-venturer, but we are preparing all the co-venturers. And second method is not quite different with this. Amount is 3,800. Prabhakar to Prabhakar to bank. Three thousand eight. That's all. Students, so you try to prepare journal entries in the books of Prabhakar. Journal entries in the books of Prabhakar and the ledger account of Arjun, the books of Prabhakar. Try your level best. Students, bye. Try to solve this and share in WhatsApp.